Friday, September 22nd, 2023. We are going live at the market. Right now it's 9:37. Market's open for 7 minutes. And yesterday we have a spike in rates and almost went to 200 days moving average. That's coming off a little bit. Yesterday was a down day in the market, as you can see. And now it's pulsing. This is the morning. Wednesday, the Fed rate came out. Thursday, yesterday, we decided that the Fed is hold the rate longer, so it's not good for businesses, especially cost of borrowing from higher to be high, and that will affect the economy. So it's over a little bit. Today, digesting again and waiting. This morning, not much big news came out. Importance that will affect the market this morning and now. So we'll have to see. Yeah. Other than that, it's a Friday. Looks like right now on the market we have an inside bar inside yesterday's bar. So it's an inside day so far. 10 minutes, only 10 minutes. So we didn't see any dramatic buying or sold off. Some interesting things going on in the energy sector this morning. JP Morgan has upgraded a lot of the whole energy sector. So that will in actuality is going to elevate some of the energy stock prices. So that will be something to watch. They project after 2025 is that there will be a more robust demand on the emerging market, of course, the oil need, while the alternative energy, the clean energy, is getting more and more expensive to develop and to put in place. So the equation doesn't really balance across between switching to clean energy and phasing out oil energy on that front. And on top of the high interest rate environment, cost of borrowing is high, and that actually really affect all the oil companies' capital expenditures. So what that means is that they don't have as much money, they don't borrow that much more money to explore, to develop, and to build infrastructure across. And when the need spikes up, then they might have to pay to catch up game. So on the long view of energy, JP Morgan on that front decided to upgrade and overweight the whole energy sector, especially Shell, Mobil, ExxonMobil, all these oil giants. So that would be interesting. I mean, oil and gas, these things have been depressed for so long, for the whole decade. But it's not actually reflecting, as you see, on the gas yet. And the oil been up already a little bit, been on a nice run. Right? Wave 1, we trace wave 2. Right? So that is something to actually on the watch now. Now we have some fundamental behind it. Right? There's a fundamental long view behind it. There's some support that put a base on these. So when they form a trend, and I will try to find a false hammer, a retracement, and then buyer comes back in, that will be the play. That will be the long play. That will be a nice play. Right now, we're already seeing it. Right? Of course, yeah. As the fundamental comes in, as you see the stock and this whole sector getting this upgrade, those are good. Those are positive. So every positive will contribute to the upside of this. So now on the wave 2, maybe we can catch a wave 3. We wait for a retracement for however long, and then find a place to catch a wave 3. Like right now, this is hugging already this trend, this uptrend that started back all the way to the bottom of this uptrend is basically June for 3 months. And it's hugging nicely this white line, this moving average. This 21 bars or 21 days moving average. So this is a trade to develop. This is a nice trade. Yeah, Charlie, a trend follower's dream. I would have to say, yeah, then this would be great. It will be the trade, but maybe even the trade of the year. Nice long-term trend following. Long-term could be months, days, months, or even very long-term. So that would be nice. It would be nice to watch. So we have these. Okay. The usual suspect, dollar yen, 4-hour graph. It did a breakout. Look at this. So let's go to 4 hours. So we marked it. It fell, spike again, fell again, spike again. Wow, look at this. As it's not as clean as. So this is the level that is actually supporting it. And it went through the resistance and then it came back running all these and then keep testing this level. So this, all this up and down. And, the question becomes, if it comes down here, do you take a long position or wait till it comes down here? That is a hard play because it's not a very clean break. So most charters or technical guys is more, even me, right now I'm hesitant even it comes back down, ready to do that. Once it do this and it doesn't held on this level and they wait till this, for whatever reason, it invalidated this whole move, this bar. And then they do this again and invalidate it again. So they're fighting. There's a lot of fighting. There's people selling, people buying. There's nothing clean indication of there's more buyer or seller. Over here, bunch of seller. Over here, bunch of buyers. So in that sense, this is a much more difficult play because now you have another huge resistance level right here. Right here is where your big resistance are. But then you have support right here too. So it's like ping pong ball bouncing back and forth, up and down, up and down. It's a more difficult trade. It's more difficult trade and on the 4 hours. So let's stretch it out. What do? You stretch it out. I mean, 4 hours like that, imagine the 1 hour. So the 1 hour, you can use the 200 days moving average as a gauge. Seems like it's hugging the 200 bars moving average on 1 hour. Maybe switch to 1 hour. That might be a better play. And the play is actually wait for a clean break and pull back now. 1 hour and the 200 moving days average is your absolute stop loss if you went to the long side. Okay, so let's go back to the fall. Fall is more messy, and the daily. And daily is just daily. You can see all that. So instead of 4 hour, watch the 1 hour instead. Use the 1 hour. If you want to play anything of that nature. But the better play is probably the break and then wait for pullback and you see buyers comes in. The key is you need to see buyers comes in. That's the key. Sort of time duration, which if we play the 1 hour. Stick with the 2 hours. Yeah, it will pretty much looks the same. 2 hours. And then 1 hour has 200 days moving line hugging that at least for the weekly time frame. You can play that for the 1 hour in that sense. The 1 hour and this, but it's only good for this duration. And so it's, I mean, try to break on the bottom, and if it's just hover here, then maybe you make another run again. Maybe, who knows? So that's a shorter term 1 hour, 4 hour intraday duration to weekly play on shorter time. Okay, let's move on. Let's move on. Quick look at Bitcoin, just know where it is. Approaching 200 moving days area, drifting off. Not nice as a whole, you know, it would bounce off and then try again. The 3 times is a charm. Yeah, second time looks like bouncing. Depends if it's, you need to make new high to establish a new trend. So in actuality, you got to break this level right here on top. Oh, this is tradable instrument of the Bitcoin. Alright, so yeah, this is not even following any of the winners, so that's that. Yeah, you can see the 20 years Treasury ETF collapsed after the Wednesday Fed's meeting outcome, as expected, because inverse relationship with bonds and interest rate. The pricing of bond directly inversely have an inverse relation with interest rate. So if the Fed's going to hold interest rate a little bit longer, or even go higher, that would depress the bond. That would depress the valuation of the bonds. That's how it is. Because hey, if you collect the same interest rate longer, so you're going to collect more money, and then so the bond will worth a little less. In that sense, yeah. Gold just compressed it in this level. I recompressed it. Hang line. Yeah. You can even move this line here. Very compressed it. And, no directionless right now. Let's look at these guys. Wow, China is crapping out on that. Nothing much. Just started flattening out, and this guy is down here one point, up here one day. So let's go back to Apple. Nothing much going on. Spacing. Google reflected as a short. Gotta wait. Things kind of like turning. Meta. Okay. You have this Doji star. You have this mini trend to Doji star. Like this and this give you a little bit bias indication on these 3 bars. So you have a little support here. And the question is it a good place to buy? Or you wait for kind of like a drift off or bounce again? I will wait for a bounce again. The broader market is not giving me really good indication that you want to go any direction up or down right now. I don't see the bigger fundamental underlying current that will support a long side of the play for that matter, or the short side of the play for that matter. It's not at any meaningful technical level yet. I was thinking that if the market broke down for 3 days, yeah, then and it gives you some direction. Right now, it broke down yesterday, but it's holding, so you have to wait for a few more days to see what the market really the direction is going. Now it's just drifting. Everything is just drifting off. Yeah. So ideally is I want some I want to buy some of the strong stock and sell some of the weak stock. I have long and short position all across my portfolio. I mean, my trading portfolio. Those are ideal. So my money comes in, make money on the short. I mean, you definitely lose money on the long, but you lose less on the relative strength on the stronger longs. So as it comes in, eventually if it does hit my target, I'll close out my short and leave the long, and then when the market turns, and then eventually the long will be stronger and not only recover the losses but make some money. That's how you work on trades. But that's why you always buy the strength and sell the weak, and you have those across your trading portfolio. So a very active trader is always adjusting, putting in more position, taking profit, or going flat, taking small losses, taking big profit, and that's how you actually over time slowly building up your trading portfolio. And you will play different time duration, hourly, weekly, monthly, and you have these all across as an active trader. But it is a full-time job. Right now I'm just doing kind of this on the side, and much less active in that sense. Not like my younger days anymore. But if I see good trade, I would take it. So this Cisco is coming up a little. It's a little bit too early to tell. What I want to see is if the market turns and goes up, will I get to close out this early and take profit early? That's will be a quick, nice trade within a week or two. Those are nice. Otherwise, hold it to the end, see what it does. And we only explained the 6 possible scenario. And only one I will lose tremendously. Otherwise, it should be okay unless the market collapses. But yeah, I mean, I'm really playing this strength. In that sense, the question is, if it breaks up, what do I do? If it breaks up, I will pocket that. If it breaks up enough, I can get to pocket my profit early. 50% of maximum profit. It's not much, but that's kind of the trade is set up that way for a very high winning probability. That's the mechanic of that trade, and you have to follow through with your setup, your strategy. Trading, besides being very patient, is you must follow through with your setup. You have to have consistency. So that's that. Nothing going on. Overall, the market is just flatlining, waiting news, fundamentals, or anything. Wow, look at this. Yeah, Western Digital. Wow, this. Look at that. Make new high. Not really. It's still around there. The momentum die off on this one. They just saw right into it. Decide to. Yeah. So we have a ceiling. Basically, this bar is turning. But do I want to go against this nice uptrend? 1, 2, and 3. Maybe it would do an ABC pattern reversal. It's a possible play if the market goes up and spike up again, and then you get a good entry area. That will be a good play. Yeah, but have to get a good price point. Let's mark this. It's a reversal, but it's not big reversal. It's okay one, but let's mark that. Possible reversal. So if it does comes up here again, and things start getting heavy, the market starts getting heavy, then hammer it down. And the profit target will be here, this peak. Yeah, it'll be nice to catch up from here. If it breaks up, And probably around somewhere, it's probably a 1-to-1 ratio, simply put, risk reward on that. If you just outright on the underlying stock, could be a play developing. Yeah, let's add that. Let's take a look at these. They were on strike. This unions was on strike on some of the automakers. Oh, American Express coming in hard, much harder than the market. So this is the week, you can tell. Never really took off during the market run in the financials. It is that. What is other credit card? Yeah, they all kind of like following the market. Except American Express are really weaker. All these guys, bank, they're kind of the underdog this year. Very heavy, very heavy. Just chopping. There's no clear trend, no uptrend, downtrend. I mean, did a drop and that's it. They try to recover. Right? Did the drop, recover, and then recover even more. Well, not JPM, but the regional bank like Key, this guy. It did this drop and it just went sideways. Now it's coming back in again. Since the March Silicon Valley blowout, all these regional bank. The problem is that they have a different set of rules on how they calculate the capital requirement. So that's why Silicon Valley actually blew up when everybody just said, I need to pull my account. There was a run on the bank. And that affected the whole banking sector. Or the whole regional banking sector. I mean, these investment bank, they're separate. They don't have retail accounts, so it's their own fundamentals different from the regional banks, the retail regional bank. And the big banks, it's different too. Anyway, let's move on. Nothing much really going on today. Looking at these, no major movement underlying. Look at what's Neo doing. Yeah, it really went through in that stat. Expand. Okay. These came off, jumped back up. Not bad. It's holding on this level. Tested, come back out. So I have cash secure protocols, expand and Lee also, but it seems like they're holding for now. So that's okay. That's good. And these guys are dogs, just dogs. Yeah. So there's so fine PayPal. Yeah, not really. Yeah, Square got cream. I have something here a long time ago, but let's take that off. Okay, this is about it today. I'm not going to continue to bore you going through this whole list. As I was saying that the market is not really doing much right now. It's really flat. Look at it's 0.1% chopping in and out, negative, positive, right? And probably maybe the market will move later on, maybe not. Who knows? We'll see. And that's that for this morning. I was hoping to find some trade or something like that. But again, nothing yet. The only thing we talked about was the dollar yen, that shorter time frame. But you have to wait for it to develop. But look at this, up sideways. So is it going to just keep laddering? I'm serious doubt. It's going to do some consolidation across and then break up or break down. I think in actuality, let this just continue onward and then into a narrow triangle. Then wait for the break. Right? So I think there could be something coming up, but the pattern is just really compressing, and I think this pattern is going to continue to compress until something major fundamentally change the whole picture up or down for it to move. Other than that, that's about it today. Thanks for watching, and I will post up more if anything exciting comes up later. Otherwise, have a great weekend. See everybody next week.